Hey guys, welcome back to the channel. Hope you're all doing well. We are again in front of the chalkboard today, so I want to break down my chicken scratch here, which is the negotiations slash timeline of this 20 unit deal. We haven't closed on it, I've kind of been keeping you up to date. We're still in the due diligence period, and we're hoping everything goes well and we don't offend any the sellers. Um, but I'll get to why I said that. But yeah, no, it's going well. We're looking for our lender right now, so we have a broker working on that. We don't typically use a broker to find our lender, but for this size of a deal, we've gone with a broker. So I'll keep you up to date on that. But I know someone asked in the comments, what the negotiations were like. So at a high level, the negotiations were not fantastic, but I will break down each step that we went through, and I can break it down to like three common themes. There were timing, patience, and confidence. So that's what I'm gonna break down for you today. I'll kind of explain each stage, but let's get right into it. So in late 2024, that's when the broker listed this portfolio. So it was four different properties in Western New York, and they were packaged together for $7.8 million. So as you could kind of imagine, that's not a small nut to crack. I mean, $7.8 million is a huge portfolio. And I believe it's something like 75 or 77% of investors in Buffalo, New York are all like mom and pop or small private investors. So we don't have too many, private equity groups or massive conglomerates coming in and buying it up Buffalo real estate. So something like 7.8 that's a pretty penny. And sometimes these sit on the market for a while, especially if they're not in great neighborhoods or in really bad shape. So that's what this one did. So there was little action on this portfolio, and the owners or the sellers, they kind of wanted to speed things up. So they told the broker, "Hey, let's break this portfolio apart and sell it separately, but let's all close at one. Let's close at one time because there's a lot of things going into that. So one being that their loan was coming to maturity. I don't have the date here, but in April of 2026, I believe it was April 1st. So that's one thing the sellers were keeping in mind. The next thing is they're going to do a 1031 exchange. So, well, let me preface the 1031 exchange first. The portfolio, the four properties were under one loan. So if they were to sell one of the properties, they would have to figure out, how to break apart that property from the loan, which can be more expensive, time consuming, and an overall burden to them than just selling all the properties. So they have a lot of constraints on, why they should sell all of these at the same time. And then also for 1031 exchange too, to get the most value and push it on to the next deal, you would want to sell all the properties and not sell three of them and then pay down one and you can own one outright because, you know, it sometimes that makes sense, but in this case, the sellers did not want to do that. They're actually going to buy something, I believe, in Florida. So kept the portfolio together through 2024, late 2024, early 2025. And then in about the mid, probably late, no, no, yeah, mid 2025, September is when we first saw that the portfolio split up into individual properties. We didn't have our eyes on the property yet. So, because in November of 2025, that's when it really caught our attention because we were looking actually at another property that the same broker was selling. And that property already went under contract. And we were going to buy a property in November as well and closing on it. So there's a lot of things going on where um, we didn't have the full picture of the deal, but also our financial situation too, because we were closing on another deal. But when we talked to that same broker, he mentioned about the portfolio splitting, which we didn't know about, but didn't put any thought into. And this is when we really started thinking about it. It's like, all right, how can we buy this 20 units? There's another 16 units too that we're looking at the same portfolio. We ended up with the 20, which is good. But we were thinking, okay, so how are we going to manage this? So the property we were closing on in December of 2025 was just a double, but we were able to pay cash for it, and it was going to we started renovations literally actually before we closed. We were able to get early access to the property, And I'll talk more about that deal later because this, I know, video is already going to go over the time I wanted to. But yeah, so we were cash constrained November, trying to figure out what's going on with the property we just bought, and in December. But then once December, we finished the renovations in the property we just bought in December and January. We had the roof lined up for early March. We're like, okay, we can now start talking to lenders about refinancing this property we just bought because we're going to have both units renovated come early spring, and we're going to have the roof replaced, which were our massive capital projects because the increase or the renovations that took place are going to increase rent, and the roof is a huge capex project, which increases the value of the property too. So that was all looking good and on track, so we could refinance in early spring. And as these properties sat on the market, in which you'll see these larger ones do, even when he did break it down, the broker broke it down. There's time is on your side, so that goes back to the timing point. Like these deals that you're going to look at, you have to be ready, but also to get that property at a discount or at a deal, you have to have time on your side. So once these properties sit long, then that's when the sellers start to get a little antsy and want to get it off their plate. And the brokers, I mean, at the end of the day, they make their money by commission. So if the offer comes in and that satisfies the seller, well, the broker is going to be on board. First walkthrough took place in early January, and that was when the whole property was exposed to us. So we were able to get into a few units. We were able to see, how the property manager maintained the place. Also, what was majorly wrong with the property, and if it was something we could even digest based on a refinance. And um, you know, if my brother and I can take on 20 units, which is significant when you're going up from buying doubles up to a 20 unit. So this is where we put the first offer in January, and that was slightly below what they were asking, about 400,000 below. But we thought, what is this property worth to us, so that we can put a bunch of time and money into it, and then actually come out with a return. So that's when we offered um, about 400 below asking, and they were contemplating it. They countered at 1.55, and they were like, okay, well, we know that there's something wrong with the sewer, because during this walkthrough, we saw that the sewer was backing up in the basement. So we wanted to be somewhat, careful on how we approached the negotiations, because the sewers were going to be anywhere from $20,000 to $30,000 easily. So we put in our offer. We had the LOI completed, and we signed the LOI. And then in early February of this year, another competing offer went in higher than ours. So our LOI was kicked out. Theirs replaced ours. And we were pretty, bummed, because we knew we were, going to get this property for a decent deal. It was pushing our limits. We were able to, figure out financially what the capital stack is going to look like. So that was an unfortunate moment, but this is where the patience comes into play, because we were patient from late 2024. So why can't we keep on following up with a broker and doing our own research on what the renovations are going to look like, how we're going to be able to complete that, and also just see how this competing offer works, or after they tour the property, what they think it looks like too. So fortunately, in late February, so maybe 2 weeks after the competing offer beat ours, we followed up with the broker, and we were able. Well, he said that their current offer fell through because it was based off of a 1031 exchange, and so the first leg, so basically the sale of the offerer's properties, did not go through, or for some reason maybe they took them off the market, or whatnot. But that means their LOI was voided as well. So then we told the broker to get our LOI back on the table, and that's when the negotiations picked back up again. So in commercial real estate, you sign an LOI. After you sign the LOI, you take your purchase agreement and send it off to the attorneys. And then after you have the attorney approval, both parties sign, then your due diligence starts. So in late February, we had the LOI signed by both parties. sent over to our attorneys and the seller's attorneys. And in early March, I think it was like maybe March 5th, we had both parties sign the purchase agreement. So that's when our 15 days, which is negotiable, starts at once the effective date of the contract, which is when you sign the contract. So during due diligence, and we kind of jumped the gun on due diligence, but you kind of need to test the waters on how you're able to do that, because some brokers are extremely strict with this needs to be signed before you even go into the property. Others are a little bit lenient. Same with the owners too. We had to ask the owners to get onto the property, or at least the broker had to ask the owners if we were okay to go onto the property for our due diligence. So just before, I think maybe a few days before our due diligence and the contract was signed, our due diligence started, we had a contractor come in and scope the sewers. So we ended up paying for the sewer scope because the sellers said they were going to do it, then they didn't do it, and we were like, okay, so what's going on? Like, you're kind of wasting time now. So we were just like, all right, this could possibly save us 15, 20, $30,000 if we just spend $400 and know what the condition of the sewers are. So good thing we did that, because the pipes that were leading from the building out to the street were made out of clay and they were collapsed. So it was restricting the flow, and the contractor who did the scoping said they could be replaced, or 2 lines could be replaced for about $10,000 a line. So then that was okay, written up and given to the broker, saying, hey, we would like to have a credit of $20,000 at closing. What can you do about it? And then he took that to the sellers, and we didn't get 20,000, but we got a decent amount that my brother and I were happy with before the actual due diligence period started. But that will come at a credit at closing. So that was like the major due diligence, operation or process we had to do with scoping the sewers. And then we started to go into more units. So I think we've gotten through at least 12 of the 20 units. And it is difficult. I wouldn't recommend not going through all of them, because you should. But there is a point where you're going to see the same thing over and over again. But they're all occupied, so we're not entirely worried about that. We could be taking on a decent amount of risk, but that's something that we're content with. We don't need to see any more of the units. So, but also during due diligence, which we still are in due diligence, I think it's up until Thursday of this week. But yeah, so we went, and during due diligence, we went on the roof. We checked out the basements thoroughly, because that's where most of the mechanicals were. So the hot water tanks and the furnaces. Another nice thing about this property too is they're all forced air furnaces in each unit. So if you live in the Northeast, that winters can be pretty tough, and therefore you want your property to be heated well. And if you have electric heat, it's very expensive and also pretty inefficient. So having the gas furnaces in the units and then also in the basement, it really helps us out, because we can replace those pretty easily, and they're the most efficient, well, unless you get the older kind, but they're very efficient when heating a small unit like that, the forced air is. And that's kind of my own opinion on that. And we've had problems with electrical heating systems in other units as well, and those just never got the unit up to temperature. So but yeah, so yes, looked at most of those mechanicals in the basement, looked at the plumbing as well. Something actually that is kind of a blessing in disguise. So in early February, when we just after our LOI fell through, they actually had a pipe burst above the electrical panels and electric meters of one of the buildings. So they had to replace all the panels and the meters, which roughly cost $30,000. So that was a great surprise to us. That unfortunate to them, but surprise to us that we just got new electrical meters and panels. So that helped us out a lot and pushed us, harder to make this deal happen. Um, so, but in the other unit, and I guess I mentioned that because in the other property, not unit property, there's the older electrical panels. So we might come into this, not a similar scenario, but a scenario where we have to replace those electrical panels, not necessarily the meters because they're already outside, but the panels itself, and that could run, $10,000, $15,000. lastly would be closing May of this year. So due diligence is 15 days. So like I said, that ends this Thursday, which I think is maybe the 20th of March. And then we have 60 days to procure a loan or a lender and a loan. And then closing would be sometime middle of May. Yeah, middle May. And then we can get in there and start renovating those units. Yeah, so at the end of the day, the negotiations are not necessarily like you at a table or on a call, hammering them out like they might be you know, in a movie, or some of these, YouTube influencers will hop on a phone call and negotiate it like a wholesale deal. This is not that type of deal. This is something that takes a while, especially if you're actively involved with the renovations and the purchase. If you're hiring an agent because you're in California and you're buying something in New York, you know, the agent's not going to look at it as thoroughly, just in my opinion, as maybe someone that's involved in the deal and knows what work needs to be done, unless that agent might be a contractor and an investor, themselves. But this takes a long time, these negotiations, and they don't always line up like you think they will. For example, another offer comes in, we thought we lost the deal, but then it comes back on the table 2 weeks later. So it's definitely a lot of patience and persistence. I know it sounds cliche, but that's what you have to set your mind to. Unless you want to be like the top bidder, which I don't recommend doing, because then that's not a deal and there's not a lot of value for you to create, especially starting off young. Maybe if you're an investor that doesn't want to deal with all these headaches and just wants something turnkey, well, maybe you can pay a little bit of a, you can pay at asking or maybe even a premium. But for the people that are watching, and I assume you're in the same position that I was in and I'm in now, is I still want to add value to these properties. I can take that value out at the end and then move it on to the next deal. Timing is also critical too, because as you think about how we entered this deal, it was the later half, of course, of the overall timeline. And if we came in this deal maybe in September of 2025, but we had all the capital ready in August of 25, well, we probably wouldn't have gotten it for a price that you know we settled on today, and what the contract's written for. It may have been 150, $200,000 more. So I would say the timing, patience, perseverance, and then confidence are your three major factors within the deal. And if you don't have all of those, you're most likely not going to be as successful as you make it out to be. And in the end, which I hope you are, of course, and I hope you are successful, of course, but there's a lot of unknowns when buying value add real estate, and your whole profits can be wiped out by, underestimating the roof costs, or thinking your sewers are fine when they're not, or having to replace all the windows on 20 units or half the windows on 20 units, and you have a $50,000 bill, and you don't know, that wipes out your profits. Honestly, that's all I have for you today. This video may not have been what you expected, because again, these deals take a long time to come into fruition, and there's a ton of moving parts. And even like up until today, I may have mentioned this in the intro, but this deal could still fall through. I mean, we just did our, wrapping up our due diligence, and we made another list of the concerning items, which were a few of the windows, masonry work on the exterior of the building, beams that were sagging in the basement, and we asked for a little bit more at closing. I know we could be pushing the limits here, because this is, people react differently when you're asking for, to take money off of a deal. So we'll see how it goes, but fingers crossed everything goes well. I had a decent conversation with the broker today on why we sent this revised credit at closing document. And I said, I don't want to derail the deal, but this is just our concerns we're bringing forth. So just let us know what the sellers had to say. And that's one thing, like being upfront too, and also not afraid to ask questions or tell them like it is extremely important, because at the end of the day, you're going to be screwed if you don't speak up and voice your concerns. So I think that's it. That's all I have for today. So if you guys got any value out of this video, please give it a thumbs up. You guys are great with the comments too. I love responding to those comments. And I think this, again, like I mentioned, this was a video based off of a comment that someone wanted to learn about the negotiations. So if there's anything else that you want more clarity on, comment down below. And if you like this video, give it a thumbs up, subscribe to the channel, and I look forward to speaking with you guys soon. Take care.